Today, we have a man that is really exemplifies the not your average investor ethos because his strategy isn't average, the way that he's done it isn't average, the way he thinks about it isn't average, and his results are not average because he is in control of how he wants to retire and leave a legacy and take care of his family and all that stuff. Welcome, everybody, to a very special edition of the Not Your Average Investor Show. I'm your host, Pablo Gonzalez. Greg is off on his anniversary trip. You can assume that he is at one of the great American downtowns, putting his family through it, understanding it, and that's accurate. He's in Nashville right now. But with us today he's a little bit of a legend inside of our community. He's recently been uncovered as the guy with the best questions. Just a regular guy with extraordinary questions is the way that we're gonna start referring to him as. It's Mike Foster joining us from just outside of Atlanta. Welcome to the show, Mike.
Thanks for having me. I appreciate it.
This is the most overdue, I feel like, Clyde journey of all time and overdue nickname of all time, for the record, with how long you've been. How long have you been watching the show?
Almost from the beginning, I think I got the initial invitation and probably held off for a few weeks, but I guess 2020, right? Right at the beginning of 20.
Yeah, right at the beginning. Once COVID hit, it just kind of became.
Yeah, yeah.
I want to dive right into your story, man, because you are as a stalwart of the community, as a client with JWB from 2014, when you just shared with me that you held off on proposing whether you should come on the show. And then you finally did, and we're really glad that you did. Why were you holding off on coming on the show with us when you know that we've been wanting you on?
I might need to backtrack a little bit to give some context to this, but my initial introduction to JWB was a little over 14 years ago when my IRA custodian hosted a web broadcast that Greg presented. And I contacted him after that because I was impressed enough. I contacted him after that to see if the company, young as it was at that time, needed any lenders, because that's what my wife Ellen and I wanted to do primarily back in those days. And so this was at a time when Greg was still in his 20s, long past that now.
Big
And
curly afro? Was he in the big curly afro days?
I did. I think I just listened to it. I didn't actually get a chance to see him.
Got it.
But the company at that time had I think just barely over 20 people. So now it's like 6 times as many people in the company. They worked out of a house that was converted into an office. So I touched base with Greg just to see if there was an interest there. He got me in contact with some guy named Alex Safakis. And Alex, who was at least his emails at that time, showed him as acquisitions and lending guy for the company. And I was pretty gratified to find out just a few months later, like not even 3 months later, that apparently because of landing me as a lender, he then was promoted to president of the company. So that was
Mike Foster, the kingmaker over here.
Or else he was just wearing multiple hats at the time. At any rate, so we started a relationship via email. I asked him tons of questions. He got back to me with everything. Eventually, I think I wore him out, and he handed me off to Lauren Traxler, who is long since married now and is now Lauren Allman.
Mhm.
And we did a lot of loans from the time that we started 14 years ago until today. We've done over 50 loans with JWB. Several of them are still active, and that was to answer your question. That was our focus and has been our focus all along. That we were, for our short-term goals, we were content to do the lending and the interest payments that we received from JWB. Didn't have any intention, honestly, for a long time of even thinking about realistically purchasing homes.
Mm-hmm.
But some circumstances changed at the end of 2022 when I think for the first time JWB offered an incentive program for people to buy house. This was like the later years of COVID,
Hmm.
where sales were down, I'm sure. And so the incentive program, along with a couple other circumstances that were helpful to us, got us to the point where we decided it was time to jump in, and we ended up purchasing three homes at the near the beginning of 2023. So we're primarily lenders for JWB. We have three homes to this day, 2.5 years later after purchasing the homes. The reason that I thought and still maybe wonder a little bit if you want me on the show is because our goals don't necessarily include purchasing more homes. And I know that JWB's policy or their vision is not to be borrowing money so that they can be paying interest to people like me. Their bread and butter is selling homes and property management, and that's what they do. So my thought is when Joanna Batista asked me if I would be interested in participating in one of these, I briefly explained some of that because I wasn't sure if I would be wanted to detail that kind of thing where I'm not one of the people who is looking at 5 and 10, 15, maybe 20 properties, perhaps just content with a couple or three for the long term. And I thought maybe my wife and I are samples of people who perhaps would be interested, but not see themselves as big buyers of lots of homes and therefore not bother with any at all. And to realize that there's some benefit to doing something like we're doing.
Yeah. Yeah. Listen, I just for context for our friends that are hanging out with us right now, is the idea that you are essentially successfully retired, right? Like you are living off of passive income. You're spending your days with your grandkids and your wife and doing the things that you want to do. And you've reached your goals through a not your average strategy that involved real estate, right? Which is something that we talk about here. But it wasn't the average strategy even within the JWB ecosystem. So, when you were telling me this stuff, I'm like, this is exactly the type of story that we want to talk about, right? Like we do this often on the show, or at least Greg does this often on the show. He talks about how the single family home asset class offers all these different ways to be involved in it in a way that can, create these outcomes that we all want to have. Your outcome, of course, is to spend time with your family, and we're gonna go over the overall kind of like strategy that you have. Spoiler alert, Mike put together a couple of slides here. This is a fully baked strategy that we're going to dive into. But I find a lot of value in your story in the sense of you're right, right? Like you don't have to buy 10, 20, 40 properties to think about having single family workforce housing as an asset class that you get exposure to in a way that makes a lot of sense for you in order to meet your goals. And I think that you're a perfect example of this. Other spoiler alert, you didn't even buy the homes that in your portfolio, which we'll go over because of the returns. You bought them for a completely different reason that matches your goals, if I'm not mistaken, right?
That's right. We have both short-term investment goals and long-term investment goals, but really we're giving more priority to the short term because of what we want to do with those funds. So we're not our goal isn't to save up endlessly to the end of our lives and then make a grand distribution or spend it all or make a grand distribution at the end. There are things that we want to do with those funds in the short term. And our conclusion for a long time was because it takes quite a while to earn enough from rental property income after the expenses that it just wouldn't fit into the short-term perspective. But with the incentives that were provided and we reconsidered the long-term benefits, that's really where we saw the value in jumping in.
Yeah, cool. So that is how the that's the preview to the end of the story. Obviously, we're gonna go through your portfolio later, but for right now, I would love to just kind of like dive into this presentation you put together for us and your financial strategy and what's going on here, Mike. So first of all, introduce us here to your family, please.
Yeah. So in the upper right corner, that's my beautiful wife, Ellen. And the old guy sitting down in the chair is me. And that's our six wonderful grandchildren surrounding us. This was a couple Christmases ago. But so the oldest now is 11, the youngest is 5. And we live near the mall and we get to see them pretty routinely.
I love it. The village raising the children. I love it. I love it. All right. So tell us about this financial strategy, Mike.
So our strategy, with the income, I'm just making the point that we do lending. It's a heavy emphasis for us for reasons that will actually come up on the second slide. But with lending to JWB, we earn income through that. With the properties, income for that is realistically not likely to come for a few years. As I said to the folks that we spoke with at the very beginning, if we do nothing other than break even for several years, I'm fine with that. But eventually that will pay off. And then we have other more traditional sources of income. And so it's really what we want to do with that as stewards of that income that are our priorities and involve our goals. The first being over there on the right side is just typical living expenses to cover our bills. Our home is paid off, but to cover normal expenses that we have, and also to be able to just do stuff together, whether that would be someday maybe doing some additional traveling. We haven't been travelers much at all other than a yearly vacation to the beach. But potentially something like that. When the third item there is when I reach the age of 71 and a half, or I'm sorry, 70 and a half, it then becomes legal with a traditional IRA to start making charitable contributions to charitable organizations through that, and to avoid ever having to pay taxes on it, which is a wonderful benefit. So we want to make some significant giving that way. Also, there is significant giving that my wife does. We set aside some side income for her into what I call her fund, but really she commits probably 95% of that, not so much to personal fun as opposed to just giving it to people that have needs, whether it's in the family or even people she's never met before who have needs. So we like to do that. We want to do that. It's a high priority to us. And that's what we try to do now, but we'll do a lot more of that when I'm 70 and a half. But the fourth item there and the fifth, the two that I highlighted in yellow are, it became our adult children, like most adult children, have their own sets of intense expenses, especially if they have a mortgage and children that they're raising. And so we wanted to start giving to our children a quarterly piece of the eventual inheritance that they would hopefully be able to receive from us, but to do that while we're alive and they're young and their financial needs are presumably greater than they will be when they get close to retirement age. So not to cover their expenses, but just in a way to take some of the edge off of today's costs of living. We wanted to do that for them on a regular, sustained basis, quarter after quarter, year after year, hopefully to the end of our lives. So that's what that is. And I mentioned to the fifth item there in yellow, I mentioned to Pablo that we decided after a couple of very stressful family circumstances of family members, one being my mom, another being extended family member, who were going through terrible health circumstances, and they did not have the funds available to them at the time, or at least not easily accessible to be able to get the kind of care that they needed. And so there can be debilitating expenses associated with aging as we get older. Statistics tell us that people who live out their years, the last 5 years of those lives tend to be the most expensive of their lives, and a lot of it involves health situations. So people who end up needing, whether it's assisted living or a nursing home, a memory care facility, or even at-home care. Those are all very, very expensive. And we decided, in fact, that they can be so expensive that they can eat away at what you have tried to build up for even for decades with an investment strategy. So you could end up spending a high proportion of what you've set aside as a nest egg into medical care at various forms. And it's doing that or facing a circumstance like that, in my view, is kind of like year after year watching the Pittsburgh Steelers jump out to a commanding division lead, only to see it crater away toward the end, and there's barely anything left to slip into the playoffs or miss it altogether. On a very metaphorical level, that's what this is. You spend all these years building up something that can be eaten away very quickly. So we decided to get a hold of a long-term care broker who we worked with for weeks, who was wonderful. She listened to all my questions. She took them in. I literally have 19 pages, single space typed Q&A back and forth with her over a period of weeks
That would surprise nobody, Mike, that you have.
that she diligently always got back to me on. If she didn't know the answer, she would go to her contacts with the insurance companies and get the answers for us. And even after all that, we put her off for 6 months. We wanted to do it, but we put her off for 6 months in order to get our finances adjusted to where we could comfortably afford this into our budget. And I'm sure she was thinking at that time that she's probably lost a sale, but we did get back and we locked it down with her, and we've been doing that, paying into that since then, and we're very happy with it. And I don't know if Pablo would want to put this up anywhere, but we would highly recommend, if this resonates with anybody at all, highly recommend her to anybody.
I just shared her information in the chat. Michelle Horak, Michelle H at goldencare.com, 813-727-5222.
Yeah. And just to assure you, we get nothing for recommending her. And in fact, if you do contact her, you don't even have to mention that you heard of her from me. It's just, I'm happy anytime that I have a positive opportunity to work with somebody and it goes really well to recommend them. And I would unabashedly recommend her to you. If that has any appeal to you at all, if that
sounds like a very interesting product. Like this is the type of stuff that really freaks me out of what healthcare costs are at the end of life. So we'll noodle on that some more. Land the plane here with
okay. And then the more traditional end of life inheritance and gifts to, again, our children, but also to other extended family members is what we would like to do. So that in a nutshell is really a mixture of our strategies and goals, relatively uncomplicated and at a high level, but it's what we want to do and it's what we prioritize for our lives.
I love this, Mike. It seems so simple, and yet I've never seen anybody just kind of like lay it out and be so clear on something like this, right? It's the inputs lead to kind of like this big ball of value that then gets distributed into the buckets that matter to you, right? Like to me, this is quintessential agency over where your efforts have gone, right? And I wonder, how did you come up with this? Is this something that, like at what point did coming up with a strategy like this that became, so clear to you materialize for you, Mike?
I honestly, I'm not sure. I don't recall that. I think it just developed over time, seeing what was important to us, evaluating what our priorities and values are in life, and how and both Ellen and I are we're very diligent about finding deals and cost cutting where we can. And, for years we've clipped coupons or found discounted gift cards or anything like that. We're very financially conscious about being conservative in our spending and then having hopefully plenty left over for where we would really want to put it rather than just spending it on ourselves.
Got it. Yeah, interesting. It's just I kind of want to like go home and talk to my wife and be like, hey, where do we want our stuff to go? And just having one of these conversations seems like a very healthy conversation of like what's important to us, what are we building for, like how do we want to be remembered? What are the things we want to leave behind? And one of the things that, seems these two things that you highlight in yellow are obviously not your average thing that people talk about. I think end of life inheritance is somewhat like a natural thing that we all think about to a certain extent. Charitable organizations, I would say everybody in our community is, you know, of that type of person that thinks about like how we want to help others. This idea of inheritance while you're living is not something that I've heard a lot of people talk about. It's something I've experienced. I know my grandfather, he had a certain amount of gifts he wanted to leave behind, and for me and my cousins, we each got him over 3 years, well before he passed. My two cousins bought real estate with it. Like to be perfectly honest, I bought my first home with it when I lived in California, and then like I've lost track of like what I earmarked it all for, but it makes a lot of sense. This idea, from a personal standpoint, like enjoying being able to give it, right? Like the joy of giving and being able to feel that as opposed to something that happens once you're gone. But I think you bring up something that's even more intelligent. It's the idea that your children are presumably going to have higher expenses when they have young kids and they have mortgages and have all this stuff going on than like later in the future. I wonder kind of like how you came up with this and how you thought this through.
Well, when we're old enough to have experienced it ourselves, so in our younger years, for example, the very day before Ellen's and my wedding, I was laid off my job. So that was my introduction to married life, which is not having a job. And so expenses were very tight, and we went on our honeymoon with my entire life savings at that time of a few $100s, and we're able to bring some of it home with us. So I guess the emphasis on recognizing people in their younger years, most of us probably don't have the same financial dynamics as and experiences certainly as would be later on. So that's why I thought, again, helping to provide for them to take some of the edge off of the sting of expenses is something that as a desire just grew, and it's gone well so far. And I think they all seem appreciative. We have four sons, so they all seem appreciative of that. So we're happy to be able to do it, and it is gratifying to be able to do it.
Is it something, Mike, where are you giving it, and I don't want to pry too much, right? But like, is there a certain you give this gift, I assume that you kind of want to make peace with like, hey, this is your money. I'm not telling you what to do with it. But is this also a good opportunity to then talk about planning for them and how they invest and stuff like that? Or is it just, yeah, just tell me more about that.
It can be, but we do take more of a hands-off approach to that and not impose our more conservative views on them. I mean, they there's a lot that's rubbed off on them, which we over the years growing up with us, which I appreciate. But they're adults and they have to make their decisions, and we don't see any of them blowing money on stuff that is just a waste. So we're very happy to do it and proud of them where they are in their stations in life.
It's got to be an interesting feeling to see the fruits of living by example kind of like manifest in front of you, man. It's really cool.
It really is gratifying just to see that. Yeah.
Tell me about the investment insurance, right? We shared Michelle's information. It's called investment insurance, but at the end of the day, it's long-term care insurance for like end of life care. It sounds like that's you talked about having to kind of like budget it and go back to her and make sure that is it an expensive product? Like how do you factor that in? Like I'm definitely very scared of, man, when I'm old, my wife and I don't have kids, right? Like I don't have anybody that's gonna like I'm a cool uncle, right? But I'm not expecting my goddaughter and my nephews and nieces to like take care of me, right? But like, tell me a little bit about kind of like how you budget for that one and how that piece gets built into the budget. Is it a significant expense that is like cheaper if you start earlier? Does it get like more expensive as you age? Tell me a little bit more about that.
It does. It is cheaper the earlier you start, and then it gets more expensive the older you get. And let me just clarify the consideration of investment insurance. That's my term for it. It's not in the product marketing, but that's how I think of it. That's what it really is for us. Again, having seen two members of older members of our family and what a strain that was on um, them personally and also the people caring for them. So that's where that idea comes from. But as far as doing that, we postponed the decision to do this, like I said earlier, for 6 months because at that time I was into my Medicare years, but Ellen wasn't. And we wanted to wait until she was off of regular insurance and on to Medicare so that we could have lower costs for regular insurance coverage and to use those funds instead for this coverage. And actually, it turns out to be for the two of us for this investment insurance, it turns out to be maybe $100 or so less for us than it was just for her all by herself on regular insurance. So once we got onto Medicare, we decided, and this is not my recommendation because people have different needs and all, but we decided to go with Medicare Advantage plans, many of which don't have any premiums, and that's what freed us up to take what was previously insurance coverage and for regular insurance and apply it towards this.
Interesting, man. Okay, cool. That's an interesting product. I like it. So, Mike, I look at this and I see, you're a self-described regular guy. You like, it seems like you like hedging for risk. You like certainty. You described it as non-sexy assets, and yet I see these like private loans, these properties, and then other sources. Why even real estate, man? Like if you have these like very common goals, why open the door to real estate and all the things that can happen when you're in the real estate asset class?
Ellen's stepmom, who's no longer with us, actually introduced her and through her us to the idea of lending.
Mm.
She did it on her own. I think she'd never heard of JWB, but she did it on her own, and we put our foot into the pond to see how cold it was, and it seemed reasonable. Although, admittedly, some of our real estate dealings over the years have led to horrendous results, gut wrenching, frightening amounts that we've lost over the years in some of our investing with related to real estate, including with lending, but also properties that we have purchased. Just
Can
have
you
not.
give me a little behind the scenes into what we're talking about here?
We started the lending to individuals or to small companies that were, for the most part, building small businesses, usually doing flips. And this all came, we got into this right at the heart of the Great Recession. And so a number of these people were not able to repay their loans. Property values back then sank into the tar pits. And so even the prospect of us foreclosing on the property, we would lose a lot just in going through the process to do it, and then we'd be stuck with this property that had no chance of even breaking even, much less making a profit. So we held on to a number of these loans and hoped that down the road it would work out, and hoped that the borrowers wouldn't just abandon ship, which wasn't necessarily what happened. And then there was another situation where we were doing purchasing tax liens in another state. And which was a good deal if the people owning the properties paid back, but if they abandoned the homes, there were some of those homes that we ended up purchasing, and they were just every one of them was a boondoggle. And even today, I mean, literally today, I'm on the brink of selling one last one that's going to cost us a ton out of pocket. In other words, there's a lot in the initial investment, the principal that is not going to come back. So we'll be happy just to get a portion of that back. That's the kind of
Got it.
losses that I'm talking about that were gut wrenching, frightening, the kind that, at least for me, keep you awake at night, staring up at the ceiling, wondering what in the world have I got myself into, and just hoping to get out in some way and not lose our shirts.
So why do it, right? Like why not stick with the old 401k and the conventional path that everybody else follows and go through these kind of like harrowing tests and stay with these harrowing tests
But
beyond them.
for well, two things. For myself, one is and a lot of people aren't this way, so I'm just saying for myself, the literally daily ups and downs of the stock market, even though over the course of time you do well if you have unsophisticated investing, but just the ups and downs are not what I would want. And many times it's ups and downs in the very same day. It may skyrocket early in the morning and then by the afternoon be down, or vice versa. And that that up and down just doesn't work for me. Ellen's much more comfortable with that, and so she's fine in doing some investing with that. But I wanted out of that with JWB. When I heard the presentation that Greg made 14 years ago, and working with what seemed to be a stable company, I thought this has positive opportunity to just be something, as you said, it's stable, it's consistent, it's not sexy, it's not exciting, it's boring. But I've thought many times, and I think I said to Greg years ago, that if we had done nothing but invest in JWB all those years, we would be way farther ahead than we are today, having tried to go out and not necessarily make the big killing in something, but to do things that are more risky. And I'm not necessarily a high risk tolerant person, so I do like stability, and we've certainly found that investing with JWB. So to answer your question, that's why didn't want to just do traditional stocks and bonds. We were already in a self-directed IRA and saw all the potential opportunities in doing that, and we wanted to do something with that. And so, do conservative self-directing through that was very appealing.
Got it. You know how people talk about like the idea of like liquidity is a benefit for you. What comes with liquidity, which is the stock market ups and downs, was just something that you didn't really enjoy. You wanted a more stable kind of like cruise control kind of like feeling to your investments. That was what real estate provided.
Well, it was actually two things with the lending. It is very liquid, so to get those payments is nice, and we lean on those a lot for covering our expenses and the other areas that we said were important to us. Um, with the purchasing of house properties, certainly those are not liquid, and we're looking at those as to the end of our lives. We're not planning to sell them. We're planning for long-term benefit reasons that I haven't really mentioned yet, to hang on to those for our kids and for our other heirs to do with what they want at the end of our lives, so that they get those long-term benefits, those illiquid long-term benefits that will become liquid for them,
Yeah.
depending on what they do with it.
Yeah. Tax advantage
That's
liquid.
right. That's right.
And then you put together this thing, right? Like this was kind of the way that I understand this is I saw this, I'm like, oh man, this is Mike's how he picks a team framework, which comes from you told me was these different L's you took in these other kind of investments. Talk me through this idea of like how you pick a team.
Well, after our investment boondoggles, and by the way, these are our two kitty cats. One of them is no longer with us, but they've been a great part of our family. We had such horrid experiences with some of the investors, and not just the investments themselves, but actually the businesses and the people running them, that it just got us to thinking about what really is important um, with any individual or company that we would invest with. And so these became the priorities for us, the seven core priorities for us that we wanted to look for in anybody that we were considering investing with. So, I mean, you can read these, but one is that it's a company or an individual even who produces profitable and non-exciting returns, just steady eddy returns. That's all we're looking for at this point. That they have a sustainable business model. It's not something that's just grown out of the ground in the last few weeks or months, as an idea goes. It's something stable and long-term that has there's good reason to assume that it will last. They have a lengthy history of success, including their online reviews, and I read them. I read online reviews, especially the best ones and the worst ones. I want to see what they say, and also to just evaluate whether I feel like those reviews are legitimate, or if it's somebody that's just been paid to put positive or negative reviews out there, or if they're even AI reviews. I look to see if those are real, and then I consider the feedback that they're giving, and whether these are good trends or something that's an anomaly. Company or an individual that demonstrates integrity in the business practices. And these next two that I've highlighted in yellow have become, because of experiences with others, have become critical to me, which is reliability, that they follow through on what they say. And they don't say, for example, that they're going to get back to you tomorrow with the answer to whatever your question is, and then you never hear from them again unless you follow up 2 or 3 times with them. That just got very old for me. And communication and responsiveness. Again, if you place a call or an email or a text or whatever the communication medium is, and I know people are busy. I know businesses are busy. Everybody can't treat you like you're the only person there, and I don't expect that. But what I do expect is a reasonable response time for whatever the issue is that I've brought up, or question or concern is that I've brought up, and so that it's not days and even weeks or never. And so that's very important to me. And then the final thing is that everybody wins. So clearly, obviously, if we're investing, we want us to win. We want the company to win too, because if they're not in a winning position, they're going to go out of business. So it's got to be a positive for them, their business partners, their service recipients, if that's who's involved, or product recipients. That's all very important to us. We want to work with people or companies who are committed to everybody benefiting from it, and nobody being taken advantage of. And so, at the risk of sounding like a commercial for JWB, I will say that we found all of these attributes with JWB, which is why we're very happy to continue this almost decade and a half time frame of investing with JWB and the people there. And the many wonderful people that we've had the opportunity to work with, including people like Jamie Crawford in the lending group, and also Courtney Robinson, who we've had more recent opportunity to work with. They're great. Everybody has been great. Our program managers and what do we call them? The property, I forget, portfolio managers. They've all been great. And so we found all these attributes working with JWB, and we're very happy to just like I did with the long-term care broker that I mentioned earlier. We're very happy to recommend JWB to other people, one of whom is one of our sons who is a client of JWB. He's got a couple of houses, and he wants to do more. So
Cool. That's cool. All right. So speaking of fathers and sons, Jim Kirko, world famous first baseman who famously watches this show with his son, he wants to know of your percentage of allocation of, you know, you know, where you're at on, you said you have your three rental properties. They're not necessarily for returns. You have your private lending and then you have other investments. Can you give us a little bit about kind of like how you've allocated?
how we
How you have allocated.
I will say this, and I said this to Greg years ago, that if it weren't for the issue of not putting all your eggs in one basket, probably funnel everything into JWB. That's the respect I have for them. So even today, I'd say we have an undue percentage invested in JWB, whether it's with the houses or lending. Any sane financial advisor would slap me around for doing that. But that's how much we think of JWB as a low risk investment opportunity. I suppose oceans could rise and drown out Jacksonville. I suppose the North Koreans could finally, follow through on their threats to bomb the United States or whatever. But I don't anticipate, short of a catastrophic circumstance, that we're going to be disappointed in allocating as much as we do to JWB. But we also have other investments with the stock market that, as I mentioned, my wife does that because I don't have the patience and I guess the emotional stamina to go through the daily looking at the numbers.
Desire. Yeah.
And then we've decided to, for several reasons that make sense for us, we decided to be early receivers of Social Security. So that is not insignificant for us either. We decided not to wait until age 70 for good reasons. So we do that too.
Got it. Okay. Before we go into your portfolio, Mike, I want to just pick at this a little bit. MVP Lee has a question that I also echo here, right? Like I look at these priorities of how you can evaluate it. Produces profitable, steady, non-exciting returns. That feels like, okay, they make a promise that doesn't seem like it's too high. It's just like just right. Sustainable business model. I think you can kind of like you said, you've been around for a little while. You can understand it. It's not some newfangled idea. That makes sense. Lengthy history of success, including online reviews. I can see how do you evaluate that. Everybody wins. I could see how you would evaluate that. Lee's asking, how do you evaluate demonstrating integrity in business practices, right? Like, are you looking at their business plan process? What kind of questions are you asking about that?
It's more a matter of evaluating information that JWB makes available, both in this medium with the show, and also with what's available online. So again, the feedback that you get from people online is important. And if a number of people are out there grumbling and complaining and calling them hypocrites for apparently good reasons, that would be a concern. But I don't see that kind of feedback. I mean, occasionally you find somebody who's negative, but I don't see any kind of trend in that kind of feedback. The things that Greg brings up on this show from time to time about how they handle internal processes, systems, establishing systems for how they work with the team, the positive feedback that employees apparently give to the company as far as an outstanding place to work. That speaks a lot. I hope that's real. I assume it is. And even the JWB Cares gift giving opportunities is a real positive. They don't have to do that, but it speaks well to me to see that JWB cares about the residents in the homes, and even giving opportunities for people who who maybe would not have any realistic hope of otherwise of being able to someday own their own home, to actually gift a home to somebody, or to make financial arrangements to be able to help them do that, at least with the down payments to do that.
Got it. Makes sense. What about these ones that you have in yellow, the reliability of follow through on what they say and communication responsiveness? Are you, are you have a long track record with JWB now, so you've been through it, but when you were evaluating them, when you're evaluating a new partner, is this kind of like, are you just like testing them through the sales process of, are they showing up to meetings? Are they responding? How quickly? Stuff like that?
I don't test on purpose, but I notice stuff. So if that's the case, if people aren't getting back to you, if they're putting you off, if they're telling you, for example, a typical example is telling you that X, Y, and Z is going to happen by whatever the date is, and I don't hear from them. Like I said before, I understand that things happen, people get sick, children get sick, something can happen. But if it's just persistent and consistent in that regard, that makes an impression on me that I don't want to be risk being a part of investing in that. And so I found from the very beginning, working with Alex and then with Lauren, and this is all on the lending side for a long time, and then with Jamie and Courtney, that they've been great, and that speaks well of the company. Responsiveness is just critical to me. I hate having to, as I mentioned before, lie in bed thinking about, or waking up in the middle of the night, staring up at the ceiling and ruminating about why aren't these people, getting back to me about something that shouldn't be that complicated or detailed. So just to answer your question, I'm not testing per se, but I'm noticing.
Yeah, I love it, man. I think this echoes a lot of what we talk about on the show. This idea of the team will determine the experience, and therefore it is the number one consideration in the investment. And you have a very clear framework of how you evaluate a team. And furthermore, it really aligns with a lot of the things we say, right? Like we talk about the phone call test. We talk about does the sales process feel like it's reactive, or are they in control? Are they getting back to you? The communication levels. And truth of the matter is most people don't realize, like you said, you're not necessarily testing them, but like you can notice those things. And if people aren't working with you, and when you're in the dating period, they're not showing you the experience that you think is like optimal, that should be a giant red flag of how they're answering phones and stuff like that. So it's like it's really cool to see it live out in real life. Mike, you ready to see your portfolio thing?
I am.
All right. So again, this is a not your average rental property investing success portfolio plan that Greg put together. Again, we have Mike's family here in a similar picture. These are investment results. We are not financial advisors on the show. This is for informational purposes. Do your own due diligence. But this is what Mike's buying plan looked like in 2023. Like you said, you bought 3 properties after many years of doing private lending with JWB. You bought them with conventional loans, all at the same time. And Mike, you wanna go a little into more detail of why you ended up, after all those years of private lending, decided to buy these properties?
Yes. There were 3 things that at least became prominent in my thinking almost 3 years ago. One was at the end of 2022, as I mentioned, Greg was discussing, I think it was their first incentive program to incentivize people like us to buy more properties. And so the incentive package was very appealing all by itself. But then it got me thinking, a couple of years earlier on this show, Greg had mentioned that for anybody who's a JWB lender, if you are interested in purchasing properties but don't have cash available, but you're lending, that JWB would work with us to free up those funds, to pull them out of the loans and free up those funds to make them available for a down payment and help with closing costs. So that was a second. And then the third was coming to, I guess, more of a realization that this would meet our long-term, some of our long-term goals, not just with 20, 25 years of appreciation, but also two enormous tax benefits, in my opinion, that are available today, as long as Congress doesn't change it 20, 25 years from now. But one of them is for what would be called being able to avoid depreciation recapture, which means today, as any of us who have properties, you can depreciate them over the course of 27 and a half years. But those are essentially long-term loans from the IRS that have to be paid back at your current tax rate when you sell the property. But if you hold on to your properties and until after the end of your life and pass them on to your heirs, they get to avoid all of that depreciation recapture that you have benefited from during the time that you've owned the property. And so that's a large tax bill that they save on. And then the other is called capital gains step up of basis, which means, if you're not familiar with it, that from the time that you purchase your property and add maybe some capital improvements to it, the value of that compared to the fair market value of what it would be at the time of sale, that gap in between is what you would pay capital gains on. And once again, if you hold on to your properties to the end of your life, pass them on to your heirs, that gap of capital gains taxes, they don't have to pay at all. They would only start paying capital gains from the time that they receive it until later. So that's why we did this. We got the three, plus we have our own home. So we have four children, four homes. We're thinking that's probably good. Plus, it doesn't drain us from being able to hit our short-term goals financially.
I love it, Mike. I love how in your strategy, the idea of giving them inheritance while you're around is a part of it, and then the idea of the inheritance that they're getting once you pass on is like you've optimized kind of like the way that you want to yourself experience the financial legacy you leave behind and the way that they're going to experience it as well, right? Like with these like optimized tax savings and experiential kind of strategies. I find it extraordinary, man. I think it's really, really cool, like how you think of this. And, this is the first time I think anybody comes on the show and talks about this idea of like you're buying these three properties not necessarily as like it's a good investment for you and like all of that stuff is all good, but it really is like this next level legacy kind of like thinking that's really really driving this thing. It sounds like these properties are less for you and more for your for your four boys to have afterwards as a vehicle for tax savings when they get to inherit all the stuff that you work so hard to pass down. It's really cool.
And these two houses on the left and the middle, they're actually next door to each other. So they're both in the same neighborhood.
Got it. That's cool. So everybody gets a house. Two of them get to be neighbors as well.
Or they can liquidate them. I mean, they can do what they want, which makes sense for them at the time. So
Yeah.
they don't have to hold on to them, but yeah,
Yeah.
they have to work all that out themselves. We're not going to do everything for them.
I love it. I love it. I love it. And again, these houses are barely just 2 years old, but here's the pie, right? Here's the pie that we like to go over with everybody. Since it hasn't been in your portfolio very long, there is not a lot of home price appreciation here. But you see that you already have significant principal pay down. You got some net rental income coming in. You got some profit here. But the majority of your stuff is, your cash flow that you're living on today is coming from the private loans. And again, we want to, well, you said you track all this stuff yourself. How does this compare to what you track yourself, Mike, when it comes to these homes?
I do it a little differently. I actually I used to break it down into the different categories that JWB used to make available on the portal for each client. But now what I do is basically take all the income and expenses, put them in a spreadsheet, and calculate the IRR on it for each individually and also as a group of three properties. So I do that once a month.
Got it. Yeah, you are you're
And
doing
part of that is trying to guesstimate appreciation because what I do, and this may have no validity at all, but what I do is I take each property's estimate on Zillow and Redfin and average of those two and figure out the appreciation or depreciation as things according to those stand at this point. But it's just a short term each month assessment of where things stand. Again, we're looking 10, 20, if we live long enough, 30 years down the road, to expect a high amount of appreciation, and that will substantially change that Pac-Man that you were showing.
Got it. Yeah, and just show the Pac-Man again. We got a question here from MVP Lee. He's asking you, 230K is a big chunk of change here, right? Did you convert IRA to purchase these homes? Like when you look here, it says there's not a lot of tax, there's zero tax savings. Are these all inside of your retirement account?
No, we had it all came from out of retirement account investing that we have done through lending with JWB. So we were able to work with in a very quick manner, very able to work with Jamie Crawford and her team to pull enough funds out of our lending program to make this available so that we could make the purchase and pay our closing costs.
Okay. And Saran is asking, Mike, do you have all of these real estate in a trust for when you pass it on to your children, or are you just owning them outright?
They are owned in a family trust, a revocable family trust.
Cool. Right on. Mike, this is awesome, man. I feel like this has been super overdue to have you on, and you have not disappointed, my friend. I love the strategy. I love the headiness. I love the how you think about legacy. To me is the thing that most stood out as like truly, truly extraordinary, right? Like from an experiential standpoint, and then from like an outcome standpoint, from when you really pass it on. There's a lot to learn here that I think people can go back and listen to. And I think I'm gonna, like I said to you, I have a feeling that we're gonna continue to like bring up this show when Greg is back and refer to it as one of these shows that truly, truly showed something, man. So I appreciate you taking the time to do this. I want to thank the community that's been here asking great questions. What you normally are doing, they were doing this time around. So never goes unnoticed that you take an hour of your day to show up here and get educated. But kind of want to leave you with any kind of like final thoughts, things you wish people would take away for, or anything that I haven't asked you here, Mike, that you want to kind of leave people with here.
Yeah, if you can indulge me for a minute, I'm not sure if we're running out of time, but um,
Take your time.
the point of all of this for us isn't just strategy. Strategy is for the benefit of hitting goals. And so our goals for us, our goals and strategies are intermixed. But that's what I would want to urge everybody to consider. Everybody's going to have their own strategy, but what are you really after in life? And I think of it in this way. If, for example, you were to become the next $1 billion lottery winner, or if one of these Nigerian prince millionaire scams turned out to be true and you're the beneficiary of it, and you are enormously wealthy to the point where you never have to work another day in your life, at least not for financial reasons. You can work if you want, but you don't have to. If that were your situation, even if it seems totally unrealistic right now, what would you think that you would want to be able to do for the next 20, 30, 50 years of your time? What would you want to do with your time? Because I think, you know, you can compound money, but time recedes. So you don't get that back. And life can be can be brief. What do you want to accomplish? And I think that, I hope that consideration may help to jar some thoughts about what are a person's passions in life? What do you really want to accomplish with your investment strategy? For us, ours are pretty unsophisticated. They're not complicated. They're not fancy, but they're us. And yours may be very different from that. And just to allow yourself to imagine what you would like to pursue if your financial investing went really well. And by the way, if you turn out to be the one who is that $1 billion winner, my number is 770. No, I'm just kidding.
I love it, Mike. You know, you've developed this reputation for asking great questions on the show, and I think the question that you leave us here with is, how do you want to, how do you want to be remembered, right? Like, if you no longer have to work, what are you going to be known for? And where do you want the fruits of your labor to go? I think it's something that I go home, pondering after the show. And I think it's a great question to ask, and a whole bunch of love here for you in the chat. I don't know if you've been watching it, but like, a whole bunch of people outpouring, saying that they really appreciate the story, everything that you're taking away, man. And I know I've taken a lot from this. So thanks for making the time, my friend.
Thank you. Appreciate you having me.
Yeah. And for the rest of you, we'll be back next Tuesday. From here till then, what do we say, Mike? What's the last piece of advice?
I'm going to introduce one other thing.
Yeah, please.
Don't be the Pittsburgh Steelers. All right, now
Are you a Ravens fan? Is that what's going on here?
I'm unfortunately a Falcons fan. That's even worse.
All right. So don't be the Pittsburgh Steelers. That's a good one to crush Greg's heart with. And then what else?
Don't be average.
Don't be average.